Hi, everyone. Good afternoon, and welcome to our event this afternoon with Alex Elias. Thrilled to have Alex with us. But before we introduce him and get started with the conversation, just want to tell you a little bit about the NYU Law Venture Fund, if you're not already aware. The Venture Fund has been at the law school for 3 years, and we exist to build a community for our students and our alumni who are interested in entrepreneurship and venture capital. We do that through a number of different programs for students and alumni, and we also do that through events such as these. We've had a host of these events throughout the spring, and this, in fact, will be our last event for this academic semester, but not to worry, we're already looking into the summer and preparing for the next academic year. With that, I'm really thrilled to welcome Alex, who is the founder and CEO of Clue. I'm not going to go through Alex's entire bio, but as you all can see from the screen here, Clue is the leading platform for artificial intelligence on culture and taste. They've pioneered the space of cultural AI. So we're talking about deep data science across cultural domains, including music, film, TV, podcasts, restaurants, fashion, products, and travel. And in addition to Clue, Elias is also the chairman of Taste Dive, which is the cultural discovery platform with over 4.5 million active users globally. So with that, I'm thrilled to welcome Alex here. I think you all should also know Alex is based in Manhattan with his wife and 2 sons. And for fun, he is an avid jazz pianist and saxophonist. So Alex, welcome. We won't be talking about music, although we can. I wish we could have you perform for us, but we'll focus in on Clue and your career path. So Alex, as we get started, why don't you just introduce yourself to everyone here? We'd love to hear a bit about how you got to NYU Law. And then, of course, let me just do a quick public announcement. I'm sure we're all familiar with Zoom webinars, but please, we want to make this as interactive as possible. So use the Q&A function at the bottom of your screens, and we'll be taking your questions as we go along. But with that, Alex, welcome.
Thank you, Anthony. That's a really kind introduction, and always happy to talk music as well if that's where you'd like this to go. But I'll stay on course for now. So I'm Alex. I started Clue actually my 3rd year of law school at NYU, which was quite an interesting experience and somewhat hectic, and I'm sure we'll get into that. But my journey to law school was kind of just post-recession. It was a classic. You know, I was looking at a lot of jobs in finance. I have a background in quantitative finance, and you know, things were obviously soft in peak recession, and I had dabbled with my own hedge fund at the time, which was called Ape Capital, which was based around systematic trading, primarily of volatility, and then eventually found my way to law school and had a kind of early interest in internet contracting and internet privacy, which turned out to be kind of a huge help with what we're doing today. But yeah, eventually found my way to NYU, to the law school, and it was a fantastic experience, and excited to kind of share more about my career trajectory after law school. Started in 2009, and yeah, happy to kick things off and dive into Clue and all the things that happened before and after that.
Awesome. Alex, there's a lot to talk about there. So maybe we can first talk about Clue's origination, right? 3rd year at law school. How did you come across the idea? I'm sure it wasn't what it is today. So maybe take us back to the originations of Clue.
Yeah. So the real, I'd been thinking about the problem for a while. I mean, as you mentioned, I love music. I love jazz. I love film. I love kind of a broad, eclectic swath of culture and entertainment, and always have been interested in recommendation systems. Dating back really to Firefly, which was one of the earliest kind of recommendation engines that was acquired by Microsoft in the late 90s. And then you have, of course, Pandora and what they did with the taste genome. And there's been amazing projects since. And really the seminal experience was Netflix ran $1 million prize in kind of the late 2000s. At the time, it was primarily DVD rating data. But the basic idea was that they open sourced, at least for this Kaggle competition. Kaggle is a large kind of machine learning community online. And they open sourced a lot of their data, their DVD rating data at that point, and basically had a competition for who could improve the efficacy of their algorithm. And it was kind of a failed experiment in many ways, that the results were not what they were hoping in terms of driving, a huge monumental return in efficacy. And around that time, as a hobbyist, I really began to think about how recommendation engines could be improved if you take more cross-sectional data into account, if you're able to take more nuanced signals into account. And really that was kind of the genesis of what led to Clue. Our original premise was that consumers would benefit from, and this was maybe a problem that was somewhat idiosyncratic to my own life, but that consumers could benefit from having a standalone recommendation engine that sort of understands taste in a holistic way, but in a focused way, without any more data than necessary, and can recommend movies and music and restaurants and books and everything you could imagine. Most of that kind of functionality is kind of part and parcel to these large B2C companies like Netflix and Spotify. The recommendation engines are essentially subsets of that overall product feature. What we felt would be interesting at the outset was to build that as a standalone product and make that available to users. And that was our initial thrust, was very much a B2C company. We launched an iOS app back in 2012, 13, scaled to a few 100,000 people, but really never hockey sticked, because it was sort of a niche community of folks that were that interested in diving into the minutia of their taste. And so really, and maybe this is kind of jumping ahead, but we realized a few years down the line that, some of the most interesting things we were building were at the application layer, essentially the API or application programming interface that we were consuming. And I'll get into that. So there was a few years down the line, we ended up shifting to our current enterprise focus, and then sort of shifting back in 2019 when we acquired a company called Tasedive, which actually predated us. It was founded in Amsterdam in 2007. But I've been personally a huge fan of the platform. And so it's been kind of a fun full circle type thing. But to go back to your question, it was really kind of an academic premise that could we make better, more nuanced recommendations through, algorithmically, if we took taste into account that wasn't siloed within one category like film. So if you understood the taste in music as well as literature and film and so on, could you make more nuanced recommendations? The answer is yes, in many cases. And of course, that was just the seed that led to a very kind of elaborate business opportunity we're taking on today.
Lots to dive into there as well,
Yeah.
Alex. I'm just thinking first, my mind went to, I'm amazed, and I'm sure everyone on here is amazed at the Netflix methodology and how they figure out what to recommend next.
Right.
I'm a huge fan of like Spotify's automatic playlists. And I was just thinking like, if those two talked to one another, what would be the next either playlist that would be recommended to me, or show or movie or documentary to watch, right? That could be really interesting, which I'm sure we'll dive into a bit. But before we go there, want to hear two separate things. So maybe one, I heard you say we a couple of times. So It sounds like you were building this while you were at law school with a team, or at least with somebody else. Where did you meet these individuals, and how did those relationships form to build Clue together?
Yeah, so in the early days, I realized that I had some chops on the predictive modeling front, but we needed, particularly on the consumer side, and eventually on the enterprise side, we needed design chops. We needed real application development chops, and being able to engineer kind of the software in the way that was necessary, and data management. So Originally, I looked at I was looking at companies that were built as kind of recommendation engines of sorts, and met my co-founder, Jay Alger, who was a co-founder of a company called Unigo, which was kind of an algorithmic university discovery engine that he had designed. So he was the CEO of a company called DeepEnd, which was a design and digital agency. They had incubated this other platform, this recommendation for universities platform. And we linked up. I literally discovered them because they won a Webby Award, which is, and apologies, we're in the middle of Manhattan as you guys are as well, I'm sure. But so they had won a Webby Award. I reached out cold, and literally from the first meeting, we just immediately hit it off, and kind of it was sort of a somewhat naive but incredible thing that we all the three of us decided to kind of shift focus within weeks and really focus on this problem and begin building this business, and that's kind of how it began. But it took, the idea itself was sort of gestating for quite a few years before making that leap ultimately. And it was kind of bad timing because it was my 3L year of loss. It was kind of going into that. But I was it just felt so timely at the time. We didn't realize we'd be about 7 years ahead of the market, which was not ideal. At the time, it felt like, we only had weeks to kind of start executing on this, else it'll, completely evaporate. And, it was funny because it was only after we began raising money that we came across a company called Hunch, which was based in New York City and was started by Chris Dixon, who's a brilliant entrepreneur who eventually sold Hunch to eBay. And became a general partner at Andreessen Horowitz, and now he's kind of leading a lot of their crypto currency efforts, and was an investor in Coinbase and so on, which obviously today or yesterday had a monumental IPO. But that so when I discovered that Chris had started Hunch, which was maybe one of the closest companies in terms of ethos. And it was after we started kind of fundraising and deciding to incorporate it and so on. There was a moment where I'm like, oh, why should we even continue? There's one of the smartest guys out there. He already started Side Advisor, which he sold to McAfee. He had a brilliant data scientist named Hugo Liu, who's now at a company called Artsy, which is also based in New York. So anyways, it was a good lesson in kind of resilience, in early resilience, because we sort of plowed ahead, even though frankly there was a much more qualified team that had already raised 20-25 million. We were very early in our approach, and really they were building this omnibus recommendation engine that they ultimately, but what I didn't realize at the time was if we were half a decade early, they were way too early, and they started back in 2007. And so they were kind of at the tail end. I remember I'd spoken, I don't want to say who it was at Hunch, but I knew quite a few people that worked there as well over the years. And they were talking, someone described it as it was like Super Mario, where you kind of run out of lives, and they were sort of on their last life. But you don't know that from the outside. That's one of the frustrating things about being an entrepreneur, is all you see are these press releases, and you don't really see the vulnerability that a lot of companies are really under, which is definitely a cautionary tale when joining companies. But it turns out Hunch was on, at the time that we were kind of looking at it and worried about them being our biggest competitor, they were on their last life, and found a great exit to eBay. And so, then that really cleared the space for us to sort of begin the journey. So that's a little bit on that.
Yeah.
And yeah,
thank you.
Of course.
I was going to ask, I'm curious. So you graduate law school, you come up with this consumer-facing app. You said 2013, right? 2012, I think you graduated law school. So you don't practice law.
Yeah, so I didn't. I never practiced. My wife, she wasn't my wife yet, but at the time, she sort of didn't know where this whole thing was going. and really wanted me to take the bar, just as a backup. But we were firmly kind of on the road to this. And in fact, there was a point when we'd already raised a little over $1 million, I think, or, in a convertible note sort of early in that third year, which at the time was obviously, now we've been, raising money ever since. But at the time that was, a huge amount of cash and responsibility and so on. And so there was some question on whether I even finished that third year, whether it was responsible to kind of be working on this after hours. And it was actually some of our early shareholders that encouraged me to continue, which was great. And one of the most fun sort of investors and checks is a comedian named Cedric the Entertainer, who's become a really close friend. And
That's awesome.
Yeah, he was an LP in a company I worked at very early on. An LP, I should say, an investor in a real estate firm that I interned in early in college, and sort of got to know him and approached him for investment in Clue. And he was one of the first checks that cleared. And I remember talking to him about, do I continue, try and finish 3L year or whatever? And he put it really succinctly and said there's something about he called it the finishing bone. There's just something about the finishing bone where you just have to finish what you start. And, it turned out to be sage advice. I definitely am really glad I wrapped law school up, and that finishing bone has come in handy ever since. So, yeah.
Great. Alex, I think what's impressive is, fast forward to now, Clue, as you know, but everybody should know, has been placed in the top 200 of the fastest growing companies in the country, top 5 in New York City. I think most recent Inc. 500 listed you as such. I'm not going to list all the names, but it's really impressive to see how you've been able to attract significant investors across different sectors. Can you tell us a little bit about that journey, right? You're a year out of law school, you've closed this convertible note. Cedric the Entertainer is one of your initial investors. How do you go about taking what Clue was then, which you've already articulated way earlier than its time perhaps, to throughout this journey over the years, growing and raising more capital and building one of the fastest growing companies in the country?
Yeah, so it wasn't a linear journey at all. I mean, I think it's more of a maze, and I think the greatest guiding principle, frankly, along the way is at any given point, what is the best thing I could do to stay alive? And that was sort of and that shifted. There's eventually a point where things shift from surviving to kind of thriving. But for many years, it was purely surviving. And I think most entrepreneurs who sort of cross a chasm of any kind, really have that instinct. And it is just, month to month, figuring out how do we hit any kind of milestone that would allow any sort of revenue to trickle in, or any sort of investment to trickle in. And that instinct was really handy, and it led us through a kind of mosaic of finding super interesting shareholders at any given time. Frankly, we've and there's contrasting views on this. I know there's a lot of you're obviously a venture capitalist, and I know there's a lot of contrasting views on whether to sort of have, some people feel it's best to take a single large check from a very engaged shareholder who is involved in governance and has a lot of skin in the game, and feel that if you take on too many investors, you're potentially diluting that activism and that engagement. And there's and then I would offer a counterpoint, because we have a lot of shareholders. Our cap table is frankly all over the place in a wonderful way. And it's been the biggest blessing for us as a business, because we just brought on unique bandwidth from so many different areas. And the reality is that even a 5-figure check from someone who's very well connected now gives you access to that person. And this idea that because they're not the only check in around, or because they didn't put 7-8 figures of capital in, they're just not going to be engaged or take a phone call, is to me is kind of totally hasn't been my experience. And so I've, in terms of so we found that the cap table, particularly early on, has really helped us serve, be kind of a proxy sales arm and introduce us to the front doors of a lot of places where, there may or may not be opportunity, but at least we get a chance to kind of showcase our technology and see if there's some way to work together. And I think to some extent, for a lot of years, our business development was sort of like a Roomba vacuum of kind of trying one thing and then sort of slightly adjusting and finding a way to, to a point where, and I guess it's worth beginning to talk about, the shift to the enterprise. What really happened was, by 2015-16, it was clear the consumer premise wasn't scaling fast enough. The original revenue model was, we make recommendations to people for a book, they buy it on Amazon, we get affiliate revenue. That's not a strong model. There's a very small fraction of consumption that ultimately happens on the back of even good recommendations and so on a separate destination. So around 15-16, there was a senior product manager at Twitter who sort of out of nowhere reached out and was interested in, she really liked our application, our consumer app, and was wondering if, was impressed with some of the things it did and was wondering if we could externalize that as an API, as a service. And so we sort of, and there were shareholders that sort of were definitely pushing us in that direction and saying, there might be a really strong business because no one's doing this as a service kind of independently, and there wasn't really a good reason why. So Twitter was one of the first clients we began kind of realizing that there was a way for us to externalize this recommendation technology, and that, purely based on entities, this idea that you pass a cultural entity through, and this is how Clue functions, a cultural entity being a movie, a music artist, a restaurant, a book, a podcast. So the way the API works, the way the recommendation engine functions, is you could pass an array of entities, so one or more entities, through in a request, and then request back probabilities or output about what the most correlated X, Y, and Z is. So it's kind of like the functionality that powers, a you may also like type bit of functionality on a Netflix or Amazon, et cetera. But it has a whole host of little features and parameters that allow clients to really dial it in. But the exciting thing is that there's a huge addressable market now for what we built that just didn't exist in the past. And the two big, if I had to kind of define the big seminal moments, I'd say first it was sort of realizing that we're probably better off creating a platform that allows anyone to integrate this kind of taste recommendation type intelligence rather than trying to hoard it and do it just as one consumer. So we could empower, dozens of consumer experiences and enterprise value adds rather than just trying to do it all within one app. And then the other big thing that happened, so for years that was exciting, Twitter, and we found some early successes, but there wasn't a huge addressable market yet. AI wasn't even, we weren't even using the word AI in 2015-16. I mean, literally it was like, that was something crazy back then for a lot of enterprises. And it was a very kind of academic, almost like a cypherpunk type domain. So we were calling it a personalization engine. And the problem was most companies didn't have, our end customer is a developer, we're sort of like, essentially an API first business. And now they've obviously proliferated, and you have companies like Stripe and Shopify that are kind of leading the way on this new generation of enterprise software. Because the previous generation of enterprise software like Salesforce and Oracle and HubSpot is kind of aimed, or Zoom even, is aimed at individuals at companies as the end consumer, whereas the API economy is the developers are your point of sale. And they're the ones consuming it. So that didn't exist. We have companies, we work with large confectionery companies now that, back then there was no developers on site, and now they have PhDs, across the board in data science and so on. And there's it's a candy company, that kind of thing. So the big shift was the shift towards AI, which really happened 2018-19. You started to see these board level mandates at a lot of companies to sort of integrate technology and AI into their processes and drive value. And then the other big thing, which ties back to my experience at NYU, was the regulatory environment just got crazy. It went from, and the problem was in 2015, 16, when we would talk to, for instance, a large credit card company, that we now work with. Back then, in the early days of the deal, their data scientists said, because what we were selling them on is you have some pre-existing transactional data. We can probabilistically enrich that and say that if someone likes this sort of restaurant, they might enjoy this sort of music, this sort of podcast, etc. It was all probabilistic. So it didn't require anyone's identity, which back then was actually a weakness because, you had companies like Axiom, which is now rebranded to LiveRamp. It's a great company. I have nothing against it, but they were offering, and a lot of other companies were offering, the ability to deterministically match identities. And data was it was like the Wild West. You could just sell. So this particular credit card company, for instance, a lead data scientist there said, why would we use Clue to generate this kind of AI informed guess when we can literally just buy the data on Anthony and see when he applied for an auto loan, what he was, it was, and what happened obviously in a few years down the road is GDPR landed. And that basically all of a sudden really came out of nowhere in terms of most people's psyches at a lot of companies. And it just completely raised the stakes in terms of violating privacy, what happens. And it kind of became a de facto global regulation because it was very difficult to disentangle data from an EU domiciled citizen who now has, the ability to make a claim. And then now so that already, and that we started to see the shift where a lot of customers we were talking to for years and were sort of writing us off, came back and were like, hey, we really would love to explore this whole probabilistic model that doesn't require identity. And then CCPA landed more recently, which is, the California regulation, which is kind of in the same way become a de facto national regulation. And so what's awesome is my experience at law school. I had Florencia Marotta-Wergler in contracts. Is she still teaching there, by the way? Is she? That's awesome.
Yes, she is, yeah.
She was amazing and sort of really got me excited about, a lot of TOS stuff, internet privacy. She was obviously on the forefront of a lot of empirical research on, click wrap agreements and do people even read these things and is there really consent? And that sort of stuff was just always percolating in the back of my head. And it wasn't that, and I loved her courses and sort of engaged in that substantial writing sort of thesis thing was focused on, it was in that world of internet privacy and she was the one who, approved it. And so all that was kind of it felt like a very adjacent thing that I just was interested in. And it's now proven to be, the fluency with which I can speak to that stuff now when we're dealing with large commercial licensing deals and we're going through compliance departments. And this is the number one thing they want to focus on. And it's, I think it's really given me a solid foundation and has been one of the most helpful experiences to draw on. So it was one of those things where, there's ostensibly very little connected between, but I think law school gives you a sharp edge in many ways because it allows you to really focus on some arcane area that, and that's what, as far as advice to people on I think it's great to just follow some sort of passion or something you're good at within the context of the law and sort of really develop some deep specialization, because even in the context of the technology company, anything you have in that realm that you are kind of a more formidable expert than most in, that's a wedge into so many companies. And it doesn't matter what it is. It could be healthcare, it could be, tort stuff with regards to like food safety, that would be a wedge into a lot of CPGs we work with, or startups. And more because the thing with a lot of startups and technology companies is, there's so much, there's kind of such a delta in outcomes between being able to make something happen and not. Any given deal can move the needle on the valuation in a way that a large software company, for instance, it's much more incremental. And so those wedges, like at my company, having someone, if I didn't possess some of those skills, the first hire I would have made would have been particularly post GDPR, someone who really understands that world in any degree. And now you see it with, I'm sure there's fascinating stuff going on in law school with the crypto side of things, and intellectual property on NFTs and stuff, and that kind of thing might just be a passion, but then could be a huge wedge in to starting your own idea, or getting into some great fast growing companies. So yeah, that's a lot of and as far as law school as well, I'd say Jerry Rosenfeld, is he still teaching as well?
Is, yes.
Oh, amazing. So he was my other all-time favorite, and I took every class I could with him, and I think the thing he instilled in me was this this idea that business is really about people. And it's kind of easy to lose sight of that when you're working on software licensing deals that might be 7, even 8 figures in terms of potential recurring revenue. And so it feels like a very mechanistic thing that, has so many little economic facets and SL service level stuff and compliance and intellectual property and so on. But, it really, even in that context, it comes down to people. And if you lose sight of that, it's a really precarious thing in the sales process, and that's a perspective I think that gets lost sometimes in law school generally. And I think, Jerry being a kind of seasoned, obviously a great mathematician, but also just one of the most seasoned bankers alive, sort of understands that, I think, more than most.
That's great, Alex. And I'm glad this is being recorded, because I'm going to send this on to Florencia and Jerry.
Awesome.
They'll be incredibly thrilled to hear what you've shared.
Make sure to timestamp it so they just jump straight into their
exactly. Yeah. This is what you need to watch, right?
Yeah.
Alex, a question from one of our attendees. Was there an experience you wish you had while you were in law school that you would recommend students to take advantage of, particularly students who are interested in pursuing career in entrepreneurship?
Yeah, I think I would have looked for, there's, I feel like in law school, and I was kind of, this was not my experience, obviously, because I ended up, having to run Clue at the same time as being in school. But I think there's kind of the sense that you're in school, and then and then you have these internships during the summer and so on. But I think, it is possible to parallel stream, even if there's hours of work. And so many people need, it's a very frothy market right now in many ways, and a lot of money and a lot of help. And, I would, if I were interested and I were in law school now, I would try and get, kind of what you're doing, Anthony. To be able to work with what you're doing, or any venture activity. There's just so many family offices now and venture vehicles, and that the potential to get involved in any way, even during the academic year, either in trying to find a way to basically be on the kind of buy side of due diligence on companies, because I think that's an incredible perch. Just seeing a couple pitches and presentations, and that's something I didn't have, actually. I sort of just waded into entrepreneurship and then figured out, and I never really had a balanced perspective on kind of how companies present themselves and how to, and that's something I think I could have benefited a lot more from. So if there's some sort of way to be on the kind of, even be a fly in the wall of pitch presentations. And I think a lot of, even things like Seed Invest, which are kind of crowdfunding platforms, and there's an opportunity to really get a sense of what a lot of decks look like and a lot of funding terms. And I think getting a handle on the different types of term sheets and preferred equity, and I think safe notes are now the thing. Convertible notes are a little bit antiquated, but learning about those mechanisms and the dynamics of deferring valuations and figuring out what the different levers are in terms of board seats and so on. I think getting steeped in that world, and there's definitely a lot of opportunities for that. Especially in New York City, as we as we come out of this, and even without, even remotely now, yeah, I would recommend just getting immersed in that world. And there's a lot of, and I think now, like what AI felt like 4 years ago, 5 years ago, I think crypto is now kind of in the early, and I think that's an area, there's so many game theoretic aspects to it, and so many implications in the world of intellectual property and finance and regulatory and so on, that I think, that's one area of technology that has so much low hanging fruit, and I kind of wish if I were starting a company today, I would think in this kind of Web3, crypto native world, particularly starting a consumer internet company today. And I think there's so much low hanging fruit. There's going to be so much rapid growth. And I think there's going to be a lot of great career opportunity for law students that have any kind of specialization in any facet of it, because there's just going to be they're going to be hiring fast and growing fast. And Coinbase is just the tip of the iceberg, in my view, at least, and I think others as well.
Alex, I'm glad you mentioned that, and two different points. First, glad that you referenced Seed Invest. I'll mention another one. You may be familiar of this, and others maybe as well, but Republic, right? And what they're
Right.
doing and allowing folks to go and raise capital, and so much to learn for students to just see what's happening on the platform. That's terrific. You're a perfect example of what you're recommending, right? Like back to your time at law school, you're looking at internet privacy, you're looking at these issues and see how that's added value over the past decade. Same for crypto, NFTs, that whole world. I mean, for students to just deep dive into anything related to that now, that's only going to expand, right, in the days, months, and years to come. So terrific advice there. Thank you. A question from the audience, which I was going to ask you as well. We've talked a lot about successes, so we'd like to hear a little bit about failures and learnings as well.
Right.
Can you tell us about a time where an investor said no, and or something didn't go the way you wanted it to? What happened, and what did you learn from it?
Yeah, absolutely. I mean, in many ways, the whole the experience has just been a stream of failures in many respects. I mean, dating, and by the way, the ratio of investors who say no to yes is probably 9-1. I mean, so 9 on the nose, yes on the, and maybe even worse. Frankly, it might even be 90 to 1. I mean, I've never actually done the statistics, but there's and one thing I've learned over time is that investors, I forgot which venture capitalist talks about how they like to invest in lines, not dots. So I've kind of inured myself to the nose on all fronts. I mean, we're constantly getting said no to on the commercial side and on the investment side, for all kinds of reasons. It's not a good fit. It's not the right time. There's no energy, there's no bandwidth, sometimes there's no money. I mean, if the venture vehicle, and, along the way, what I've come to realize is, a no is just, I always treat it as kind of a temporary thing, and I try to never close doors. And many of our investors are people who have said no in the past, and I just keep hitting them up, and that's the same with companies. I mean, so many of our current clients have been companies that have said no before. And what ends up happening, I always treat a no as an opportunity. Because now they've said no, and you've sort of set a bar. And if you come back at any later point and you're doing better than you were when they said no, then all of a sudden, and they're welcome to say no again. And we've had people say no 15, 20, infinite amount of times, honestly. I mean, it's just, the best advice I've heard is if you're not getting said no to almost every day in the context of starting a company, you're probably not pushing high enough, hard enough, or far enough in some way. And so then, they'll say no again. And if you come back in a year and you're now here, then they're going to start becoming really insecure about the fact that they're saying no to you. And that's typically when we do a deal or get an investment or whatever. So it takes time. And I think there's very little patience in the world. And I was certainly impatient early on and would beat myself up about it. And, I still beat myself up about the fact that, like, Brian Armstrong yesterday went on a long tweet thing about Coinbase and his experience, and he's a remarkable entrepreneur. And he was talking about how long a journey it's been, and it's like I started, and he built $100 billion company since 2012, and is describing it like it was this infinitely long, painful thing. And the truth is, most companies take way longer. They don't. They don't. You don't get to $100 billion in less than a decade in most cases. But I do think there is this kind of expectation that things happen quickly. And I think perseverance and patience is actually a big competitive advantage, because it allows you to kind of establish those data points over time. And even the story of our company to many extent is we could have very easily quit as a consumer failure, as a B2C failure. When we started, we started with a premise, and the premise failed, but not all is lost. You've built so much in getting to that. And I think too many companies, particularly consumer facing bets, sort of once the cash runs out, they end up, they sort of abandon all of it, and oftentimes, there's so much value that's been built that if you just took a different perspective, or were willing to be a little, have more humility to some extent about what your initial hypothesis was, and if there's any way that this could. And that's frankly what we did. And staying very lean to some extent. The fact that we weren't able to raise, we at any given point, particularly early on, we always set out to raise more money than we ended up raising, and that's because too many people said no. And I think over time that was kind of the biggest blessing. The story of Hunch was one, our predecessor was one where Chris was already had a big exit. He was a very storied entrepreneur by that point. So he raised 25 million in his very first round, and just hit it hard and hired a huge team and was burning a lot of cash, and then sort of didn't have the flexibility, because even if you're Chris Dixon, if you've already kind of used up your lives and raised at a big valuation, it ends up being difficult to kind of keep pursuing that premise. Whereas to some extent, the markets sometimes help you out. If you don't really have the market yet and people sense that, and you're not able to raise at a huge valuation, and you're not able to bring in as much money as you'd like, you sort of stay lean by virtue of not having any other choice. And that's, oftentimes a huge advantage if you're able to just stay alive and find the market, which for us eventually happened, 4 or 5 years in. So it doesn't always happen right away. But yeah, there's, just being able to kind of repurpose no's and think about them in a different way is really handy, because it's just part of there's no entrepreneur who doesn't, even Brian, someone was posting, about Coinbase. He was initially looking for a co-founder on Hacker News, I think. And the comments he got were just excoriating. They were just like the meanest things of, he was just asking if someone wanted to try starting this company with them, and they were writing things like he just, making fun of his sentence structures even. And it was just brutal, and if.
Did you see the post? I don't know who posted it, but did you see the post of Coinbase's first event?
No.
Yeah,
no.
there's a great, somebody posted photos, right? Like of Coinbase's first event. And you look at those pictures and you're like, oh my gosh, like the room's barely full. It's completely,
just like
exactly. You're like, what is this?
Yeah, totally. And everyone sort of feels like, it was an overnight success, because that's they heard about it, it was over. Like you sort of feel, I think it's human nature. You kind of feel like whenever you hear about a company, that's kind of when it was born, around that time.
Yeah.
So, which is not the case, obviously, in most cases.
Yeah. Thank you, Alex. And thank you for sharing so openly on that. I think it's a great lesson. And a great point for folks to hear about, right? That the journey is long and it's challenging and lots of obstacles to overcome. A few more questions from our participants today. One is about sort of advice for law school students. Giannis is asking that today the entrepreneurial business and startup world requires a very broad spectrum of knowledge and expertise. Would you advise law students and graduates to be philosophers, meaning having a broad knowledge base, or to be specialists?
I would say, I don't know that they're mutually exclusive in any sense. And I certainly wouldn't go out of one's way to kind of restrict a breadth of knowledge, because I think sometimes it's the interaction between different areas that present the most opportunities. So, for me, it was my interest in culture and discovering movies and music and stuff combined with, predictive modeling that kind of birthed what we do. But I do think that specialization is important. And, you should seek to, it's easier, I think, to just dabble in a lot of different things. That sort of becomes, I think that's to some extent the default state of my generation, younger generations, and slightly older, is to sort of, there's so much available to us by way of information that it's easy, with everything from Reddit to to masterclass, to become kind of a dabbler in a lot of different things. And I think it's essential. I think true success comes from some sort of focus at the end of the day. And I would encourage, while you're in law school, the great thing about law school is there is the ability to do so many different things, but there's also the opportunity to really specialize and sort of hyper specialize. And I think when you're in law school and everyone else is in law school, you don't realize to what extent you're sort of burrowing into the weeds of an area, especially if you continue to take courses on, contract laws or whatever. Like people don't realize, and a lot of legal practitioners don't have that. I mean, they have to kind of learn on the job, and they don't have, as much of that luxury. So I think it's I would say definitely do not miss the opportunity to specialize in anything, and even if it's not the thing you end up using, just burrowing deep into a subject, often builds a passion for that subject and a competency. And then I think it just really becomes a hook into, you start seeing new opportunities, once you've really mastered one little area. There's just so many, a lot of people describe starting companies as kind of a fractal, problems to solve are fractals. There's not like a zero-sum game where they just go away. The more you zoom into something, it just creates new companies and new opportunities. And, you see it in the API-driven businesses like ours, where there's even unexpected collaboration going on, like Shopify and Stripe actually work together, and they're creating, and the whole is greater than the sum of the parts. And so I would definitely advise to not miss the opportunity to specialize in anything. And hopefully it's something you're interested in.
Great, Alex. Also want to talk a little bit about your team. And there's a question here about, as you're hiring for employees, what, in addition to skill sets, what do you look for in the team? And maybe we can connect that to also how you're managing and leading such a fast-growing company, especially in these challenging times.
Yeah. So I think what we look for, I mean, first, nice. I've had, in talking about failures, I mean, we've definitely had experiences where someone's not a nice person despite being extremely competent. And that's one of the most, in my experience, is just one of the most taxing, and I think there's kind of a mythology as well of the Steve Jobs type individual is very mercurial and mean, and that becomes mythologized to where I think a lot of people think that's almost like a necessary trait. And I think in many ways he succeeded in spite of that, not because of that. And so literally, my top, and we're obviously looking, for, so anyway, one of my top guiding posts in terms of when engineers are hiring other engineers and so on is nice, competent, and nice are two of the most important. And then I think building diversity, I know it's obviously a big, there's a lot of lip service, but I think I've experienced that it really makes a difference when we, when you sort of hire too much in one mold or one's own mold, or, mold of people that work underneath you or anything else, you end up getting a lot of groupthink and a lot of kind of silos and even knowledge silos, because people, tend to kind of start associating with each other, and it ends up being hugely detrimental to product development, to even productivity. And So we've kind of gone out of our, we go out of our way to try to find any kind of diversity we can get our hands on, whether it's geographic perspective, knowledge base, ethnicity, everything, sexual orientation, anything we can get our hands on that is different from what we already have. I always see and obviously as long as it also meets the criteria of being nice and competent, then that to me is kind of our guiding posts. And to some extent, we've tried to be a little bit decentralized with hiring as well and needs-based. So we kind of, at any given point, this might be a little bit unorthodox, but what we do is when we sense that someone's getting, we've built things organically in the sense that when we sense that someone's getting overwhelmed or overloaded, their particular area of our stack is overloaded to some extent, then we give them headcount. And we've been building in this kind of organic fashion that's been working thus far. I think as we start to approach, if we get into the hundreds and then thousands, of employees, there's going to have to be a lot more centralized infrastructure. And hiring an HR person early on was a big thing as well. And it's just taken so much of the load off of the team in terms of actually dealing with the hiring process and being able to accommodate benefits and salary negotiations and so on. It's been really handy, even though it didn't seem obvious at the time, to bring on someone to head up HR. That was an early function that we hired even before the headcount even really warranted it, and it's been kind of a godsend. And we've had the same person on HR from very early on. So that's kind of that's been our approach, and we're always, if feel free to reach out to I'm Alex at Clue, and if there's some way given our capabilities that you feel you might be able to help us grow or do things to extend our ecosystem in some unique way, we'd love to hear from you. And I think that's we're very, very open, growing, and believe in New York City as well. We're kind of we're excited to expand our footprint. Despite the fact that we made a few remote hires, we definitely believe in technology in the city and in the kind of centrality and the energy that comes from being in New York City. And we're kind of very proud of being domiciled here. So we're expanding our footprint as well, even on the commercial office space, which I'm sure comes as a relief to, a lot of commercial landlords and real estate owners. But we're looking forward to brighter days ahead.
Same, Alex. Thank you. Thank you for offering that. And thank you for sharing that. One final question as we wrap up here. You've acknowledged this already. The past year has been quite challenging. We're still in the middle of a pandemic. Think about our students on the Zoom. They've been learning virtually. What advice do you have for them, no matter where they may find themselves in law school, as they think about what's ahead?
Yeah, I think, I think obviously it's been an incredibly taxing. I would say first a note of kind of empathy that I think we're all feeling, more. We don't give ourselves credit for how fatigued we are oftentimes just being in this constant, perpetual virtual environment, and a lot of the richness of interaction and so on has gone away. And I think there's been something fundamentally taxing about that, and particularly people with families. We have two small kids that one of our youngest is turning 1, and he was born kind of right at the depths of the pandemic in New York City. We stayed in New York City the whole time, and it was really heartbreaking to see a lot of our friends leave, some permanently, some otherwise. But I think, there's, in terms of a couple of notes of optimism going forward, I think there's, the job market, at least in technology, I think certainly in legal services and all is going to be exceptionally strong going forward. The notes of optimism, if you choose to, be in New York City kind of over the long term, I think the city, a friend of mine from McKinsey sent a report to me that was, really well reasoned about and just written, kind of addressing point by point all a lot of the kind of pessimistic arguments that have been put forward about the future of New York City. And I'll send that to you, Anthony, after the call. But Yeah, I would say that to the extent possible, kind of give yourself leeway emotionally to recognize that it's been a pretty exhausting time, and it's sort of, even as we re-enter, I think there's a lot of anxiety about now it's going to be a whirlwind of activity all of a sudden, and you have to go from kind of essentially this very sort of in one room virtual type of taxing environment to kind of the roaring 20s in many ways. And I think I would be super excited to be graduating right now or be in law school, because I think the world ahead is just going to be, things are going to be growing faster than ever. There's going to be more opportunities at the individual level. I think a lot of the hierarchy that used to exist is being somewhat questioned and decentralized, for not to keep jumping back to but I think there's going to be a tremendous amount of opportunity going forward, and I would just try and build some specialization and wedge in and sort of trust your instincts to find your way in this exciting new world. But yeah, I would definitely I would note sounds of optimism going forward, and I think it's a super exciting time. To some extent, I'm envious of people who are just just starting careers right now, because I think you're sort of climbing the right hill, so to speak.
Well said, Alex, and I couldn't agree more about the future of the city. A huge thanks to you, Alex. It's been such a pleasure. A huge thanks to all our attendees. In the coming weeks, we'll post this recording onto YouTube as well. Please continue to take good care. And Alex, looking forward to talking again soon. Thank you.
Awesome. Thanks, Anthony. I really enjoyed it. And thanks everyone for listening. I hope it was somewhat helpful, or at least interesting.
It was terrific. Take good care, everybody.
Cheers. Bye.
Bye.